What's been going on with the banking crisis, it's basically led to a flight to safety.
How the banking crisis is allowing the tech sector to open up and provide a haven for investors.
What do you think that means for the banking sector in the short term as well as in the long term?
Silicon Valley Bank collapsed at an unprecedented speed. Can Washington prevent another viral bank run? How are markets getting affected with this banking crisis? What does the future of Bitcoin look like? And can Bitcoin prices go up to $30,000? To answer all of these questions in today's video, Mark Yusko has shared his thoughts on the future of Bitcoin and crypto amid this banking crisis. He also explains what led to this banking crisis and how it will affect the markets ahead. To know more details, stay tuned until the end of this video and be sure to subscribe to my channel for more of the latest updates on economy, crypto, and market trends. Let's get into it.
You know, if you write the word crisis in Chinese, it's actually two characters, wei ji, and wei means danger, ji means opportunity. So yes, there's certainly a crisis, but in every crisis, you have the danger part, and we can talk about what that is in terms of the damage to the banking system and the collateral system. But there's also opportunity, and I think the opportunity here is quite robust, and I think we're seeing it particularly in Bitcoin, which, despite a banking crisis and bank stocks collapsing as much as 100% in some cases, Bitcoin went up 30%. So wait, what gives? Store of value, flight to safety.
When a crisis knocks on the door, most people think about the negative consequences, but Mark Yusko believes that every crisis has a silver lining. Going back to 2008, when the banking system collapsed, it created an opportunity for Bitcoin to come into existence. Similarly, when the COVID-19 pandemic hit, it created an opportunity for people to invest in cryptocurrency. And just like that, Bitcoin, despite a banking crisis going on, went up and up in March and is now at the $28,000 price range. Bitcoin's recent surge has set off speculation about whether the cryptocurrency will reach new all-time highs in the coming months. Many experts have also noted that if the banking crisis intensifies and investors choose to keep their wealth in Bitcoin instead of banks, then a rally to $44,000 or higher could be possible in the coming months. Let's get into the next clip to hear Mark Yusko's thoughts on the banking crisis. But before jumping ahead, be sure to give this video a big ol' thumbs up.
Let's talk about the banking crisis to begin with. So you got the first part, which is, all right, was there a systemic or systematic clampdown on banks that were friendly to crypto? Choke point 2.0, it's been called. Yeah, I think it's actually pretty clear, right? I mean, that's not supposition or hypothesis or pointing fingers at the big bad government. It looks pretty clear that there were certain banks that were targeted early on, Silvergate and Signature Bank to start. But then something kind of strange happened in that Silicon Valley Bank, which really you wouldn't consider a crypto bank. It's more of a tech bank, a bank that was used by a lot of founders to back their businesses, but also used by firms like ours, venture capital funds, to fund capital call lines of credit, and very large bank, very large business, huge growth market. And it got caught up in the second part of the crisis, which is this sudden realization. Now, why it's a sudden realization, I don't really understand, that these banks had unrealized losses on their government bond portfolios. And it all came to light, on the Wednesday, a couple weeks ago, 3 weeks ago, when, Silvergate had basically been crushed and put under, and Signature Bank was being crushed, and then there were some noises about some other crypto related businesses, but Silicon Valley Bank basically had a little mini bank run.
We can see that bank runs in the digital age are different. Frightened people don't need to walk to a branch and ask for their money. They can do that from their homes. What makes it worse for banks in the fractional reserve era is that tens of thousands of people can do that simultaneously. And that's what happened in the crisis as well. After the bank was forced to sell bonds at a loss, its stock price plummeted and depositors panicked, leading to a classic bank run. A bank run is typically the result of panic rather than true insolvency. However, a bank run triggered by fear can push a bank into actual insolvency. So, what begins as unfounded panic can eventually turn into a default. Bank runs not only affects one bank and can also spread from one bank to another, creating a systemic banking crisis that wipes out most of the banking capital in a country. You see, the failure of SVB was the second largest bank failure in US history, after the financial crisis of 2007 to 2008 in the United States. It also raised important questions about the stability of the US banking system and the effectiveness of the regulatory oversight. The recent banking collapse has generated widespread support for Bitcoin as a financial alternative. Let's get into the next clip to hear more from Mark Yusko.
Make a long story short, Silicon Valley Bank had this issue where some depositors took money out. So like, all right, we need to sell some of our assets and pay those depositors. Well, wait a second. Our assets went down in value because we bought government bonds. They raised interest rates. And so we have these unrealized losses. Well, now we're being forced to realize those losses. And they said, all right, well, we'll just issue some new stock to cover it. And everything was kind of fine. They had, $2.5 billion of new equity issuance to cover the $1.8 billion. And on a $200 billion asset, we're not talking a lot of pain, really a rounding error. And a couple people, and I won't point fingers, but everyone kind of knows who they are, sent these stupid ass, that's a technical term, memos to all of their underlying companies saying, get your money out. And they triggered a bank run.
Yep.
And bank runs are the one thing that can kill a bank.
Absolutely.
Right? I mean, fraud and bad management and all that can hurt a bank, but what kills banks is a loss of confidence and a bank run. Because the way a bank works, we've all seen the movie It's a Wonderful Life, is the money comes in, it doesn't get put in a vault and sit there. It gets lent out to other people, and then they deposit their portion, and then they lend it out again. And this fractional reserve banking system, I believe, creates wealth because you're putting money to work, increasing the velocity. But it requires confidence. It requires trust. It requires calm. Because if everybody comes in and says, I need my money, all of it right now, it goes away. So these idiots, in my mind, foment.
Silicon Valley Bank collapsed at unprecedented speed. Can Washington prevent another viral bank run? Do you agree with Mark Yusko that bank runs are the one thing that can kill a bank? How will Bitcoin prices get affected by this banking turmoil? Let me know your thoughts in the comment section below. I hope you learned something new and enjoyed watching. And if you did, give this video a thumbs up and subscribe to my channel for more of the latest videos on the economy, crypto, and the market. You can also hit that bell icon to never miss any video. Thanks for watching, and I'll see you in the next one. Adios.